Well, Japan, I think, is caught in a very difficult situation right now. Certainly, they've battled deflation for decades. They're finally exiting deflation. And at a time when the economy was garnering momentum, now we have this oil price shock, which is a big deal for Japan, which is an oil importer. And I think that the currency weakness in this context is a lot more pernicious. So it was really interesting to me to see the final warning come last night, the price action come this morning. And when I take a step back and I think about it, historically, some people think that Japanese authorities are tolerant of currency weakness because they're an export-driven economy, but they also import raw materials. And so we're in an inflationary environment globally where having a weak currency is not really beneficial.
What do you make of what appears to be, just judging by the rhetoric for the last 12 to 24 hours, higher energy for longer? I don't see either side backing down here. So the strait looks closed. That's reflected in the energy markets. Has that impacted your GDP outlooks, your inflation views?
Well, we're certainly keeping an eye on it, and I do believe that it creates some downside risks for consumption. Consumption's coming off of strong levels of the last few years. We saw the GDP data this morning, a sequential moderation in consumption. And if energy prices and gasoline prices stay elevated, some downside risks to the second quarter as well.
Paul, get another one in here. I got like 8 questions. She's fun.
How about we also got some consumer data today? The consumer spending, consumer income spending's above the level of income here. So the consumer seems to be still out there spending. And I guess one thing we've learned is really shouldn't underestimate the strength of the U.S. consumer out there. How do you think about the consumer?
Well, the consumer has been surprisingly resilient, and it is at odds with the consumer confidence data that we're seeing. So people are very nervous.
From Michigan?
From the great University of Michigan, NCAA national champs.
Yes.
Let me squeeze that in.
Do they have a shortstop for the Mets?
So with the consumer, I think the income gains over the last few years, and also there's a lot of inertia with consumption. People are kind of reluctant to pull back unless they absolutely need to. We are seeing some of those signs of strain in lower income consumers. Higher income consumers continue to spend. And we'll need to see what happens over the next couple of quarters because, as you said, the oil price shock is pretty meaningful.
Extraordinary day of conversations here across America, around the world. Sophia Drossos with us with Point 72. Just an extraordinary career wrapped around international economics and foreign exchange, all sorts of ways to go here, including her past work at Morgan Stanley. What in God's name is the chief dealer at the New York Fed? Are you the one that orders pizza?
Oh, if it were only so simple.
Give us a snapshot into that. I mean, it's all this mystery and, and that. You're up on like 7th, 8th floor, and what do you do as a chief dealer?
Yeah, well, as a chief dealer at the Federal Reserve, you're responsible for overseeing the transactions, particularly the foreign currency interventions.
Right.
And so I, back in the day, before we all had Bloomberg on our phones, I would have like an FX alert beeper, and it would tell me at any given moment, 24/7, where currencies were trading. So typically, we would have some insight into maybe one of our G7 partners would like to intervene and would like the support of the United States or would like U.S. monetary authorities to execute the transaction on their behalf. So that was me. I would be on the other side of these trades, either on the phone or electronically executing.
I got 8 ways to go with that beautiful explanation. Sophia, right now, the United Arab Emirates is walking away from OPEC. The Churchill states, with all the history, clearly looking to America, and they want some form of swap line because they're brokered because of the war. Explain like that conversation, if it's happening.
Yeah, so traditionally the swap lines happen between the central banks. And it's an opportunity for other central banks to ask the Fed to provide them with dollar reserves, dollar currency, in exchange for the home currency of the other country. And typically we see this during times of stress. So we saw the expansion of the swap lines that the Fed has during any kind of market crisis, but very recently during the pandemic. And also, I think the Fed does have these ongoing swap lines and cooperations with other major central banks. But it is one way to get dollar liquidity.
Right.
What was interesting about the UAE is that they had the conversation with the U.S. Treasury. And so that typically isn't the standard protocol. Usually it is between central banks. But it shows that on a contingency basis, at least that's what the UAE and the U.S. Treasury have said, it's a contingency to think about ensuring that they have meaningful dollar liquidity should they need it.